Pfizer, stock symbol PFE, closes trading today at 33.99. Since March 2020, it has risen over 120% to more than $60 a share, but since then has dropped more than 44%. So what does Pfizer do, and is it currently a buy at $34 a share? Pfizer is a pharmaceutical and bio company, first founded in 1849, and is currently run by Dr. Albert Bourla. Some of its leading products include Advil, Centrum, Chapstick, Emergen-C, Robitussin, and especially the COVID-19 vaccine and treatments. Here's Pfizer income statement, and in 2022, they have a revenue of $100.3 billion versus only $81.3 in 2021 and $41.6 billion in 2020. Because of COVID-19, Pfizer started researching for the vaccine, and in late 2020, they released the vaccine to the public. Thus, you can see a big increase in revenue in the year 2021 and the year 2022. The operating income in 2022 is $39 billion versus $27 billion in 2021 and only $9.8 billion in 2020. Moving to its latest quarter, we can see that Pfizer has a revenue of $12.7 billion, which is much less compared to the year before, where they have $27.7 billion. By 2023, most people realize that the booster shot do not prevent them from getting COVID again, so they stop taking the vaccine. Thus, the revenue from Pfizer start dropping. With the decrease in revenue, we can also see that the operating income also dropped compared to the year before. The latest quarter see an operating income of $2.7 billion versus $12.7 billion the year before. Compared to similar companies, Pfizer market cap is currently at $191 billion versus Johnson & Johnson $421 billion, Merck & Co. $272 billion, and AbbVie $270 billion. Even though Pfizer is currently smaller than other companies, they actually make a lot more money in 2022 compared to the other companies. However, we must not decide to buy the stock or not based on the past, but rather look at the revenue for 2023. It's estimated that for 2023, they will make $66.4 billion in revenue, which will give them a price to sell ratio of 2.89, a non-GAAP earning of 3.31, and a forward price earning ratio of 10.27. That is quite an attractive valuation compared to 16, 35, 13, 22, and -26. So is it worth the risk right now? Before I start going further, please make sure to read the disclaimer. Looking at the chart, we can see that Pfizer has retraced more than 0.76 since the initial move in March 2020 to the high of December 2021. One of the reasons why Pfizer stock has been going down lately, because investors fear that Pfizer can't grow anymore since people are purchasing less COVID vaccine. On top of that, Pfizer has been spending too much money to acquire other companies, one especially for $43 billion. This may seem like a negative thing at first, but according to Pfizer, Seagen is expected to bring in $10 billion in revenue by the year 2030. The 0.78 retracement may be a good spot to start buying. However, it is not guaranteed that Pfizer can't drop further down below 32, breaking 30, and even breaking the March 2020 low. But because the price to earning ratio is predicted to be less than 11 for the year 2023, you're getting roughly a 9% return on investment. On top of that, Pfizer is paying you 41 cents a quarter. That's roughly $1.64 a year, which is more than 4.8% yield a year. I believe Pfizer at the current price is a good value, and there's a good chance that it might go to $44 by the end of 2024. Of course, always make sure you have a plan before making a purchase. Thank you for watching. I'll see you guys next time. Bye.